So it has all the right sort of initial ingredients and sort of high value roadmap to end up being something quite interesting. And if we test it and we correctly intersect structure, or we find structure where we predicted, and of course, if that's mineralized, then it's sort of it's a real win, and we'll start working on building out on that structure. And it, you know, who knows, it could end up becoming another 1 or 2 kilometers of mineralization, which really starts to put scale on this footprint around the Tunkillia Project.
Hello, welcome to Assay TV. Today, I'm joined once again by Alex Scanlon, who is Managing Director and CEO of Barton Gold, a South Australia-focused explorer with 2 major exploration projects at Tarcoola and Tunkillia, which comprise the company's southern hub, and a northern hub centered around the past-producing Challenger mine, and which includes 100% ownership of the region's only gold mill. Alex, great to see you today again. Last time we spoke, we talked a lot about your drilling success in 2021 at Tarcoola and Tunkillia. Since we spoke, you've started your phase 3 drilling campaign. Tell us a little bit about what you're doing there and how that's going. First of all, Tarcoola, at the past-producing Perseverance mine. When we spoke last time, you'd had some success with the Perseverance West. You'd been drilling there, and also underneath the sort of western edge of the pit at the Deliverance target. What's your phase 3 drilling campaign aiming for now?
Yeah, thank you. Look, what we're looking at from a regional strategy is, on the one hand, identifying high value resources, and on the other hand, identifying new large scale structure and mineralization. So we're sort of trying to serve 2 masters and balancing the risk of investment and discovery very carefully on that. So with our current drilling program, we're doing 2 things. We're following up some of the success we had last year, identifying this high grade gold zone just at the edge of the open pit. The Perseverance open pit mine is a very shallow mine. It was only mined to about 70 meters deep in the southwest end of the pit. And last year we confirmed, as I should say last year, being July, August, September of 2021, we confirmed a new shallow high-grade gold zone, which we call Perseverance West, and that extends from essentially from the pit wall to about 400 meters southwest of that open pit. So one of the things we've done this year is to come back and basically infill a little bit some of that Perseverance West zone, as well as extended. The reason being that the mineralization that we've identified there starts at about 25 meters depth and goes down to up to 125 meters depth, but it's fairly consistent, very high grade stuff. So we're getting intercepts of anywhere between 4 and 8 meters of, and 5, 10, 15, 20 gram per ton. And then that is overlying the very rich Pila conglomerate, which form the richest parts of the open pit. And that's where we're intercepting things like 5 meters at 48 gram per ton. So the idea is to develop some very easily accessible high value gold ounces on that open pit and essentially de-risk continuity there. And then on the other side of that, meeting these sort of regional exploration and just sort of discovery initiative, we're out there testing some early signatures that we've gotten, some interesting geophysical anomalies at School and the Eelbara target. School is kind of a mag gravity feature, which has not previously been tested. And the Eelbara target is a major dilation zone, essentially deflection in a large scale shear. The real test there is trying to figure out a little bit of how thick is the cover sequence there. It's never been tested before. We know there's something very large going on undercover, but we're sort of getting into it a little bit to sort of test it. So the idea is to build out that footprint. We'll be coming back later this year and testing some of our higher priority, lower risk targets like Warburton, Tolmer, and Dark Hill out in our Western Targets area. And then looking down at Tunkillia now, our rig is getting ready to move down to Tunkillia, where we have last year identified 2 new gold zones at the 223 North area and the 191 area. So where we are drilling now is about 3 kilometers to the northwest of the 223 deposit. 223 deposit is our 965,000 ounce deposit there. It's about 2.5 kilometers long and about 3 kilometers northwest along strike, if you will. this is where we have Area 51. And that's something that really stands out from a geophysical anomaly standpoint. We also have some interesting historical calcrete and some very shallow RAB and air core style drilling there. So it's an area that we think could turn into an entirely new discovery, new gold zone, and really help build that Tunkillia footprint as well.
And how many meters and sort of how many holes are you planning to put into this Area 51?
Area 51 will probably be somewhere between 10 and 14 holes. We're still sort of scoping what the final plan will be as we are going into it. We've got some spare meters that we can move around in our drilling plan. So we'll probably look to drill somewhere around 1,500 to 2,000 meters there to really try to get a firm understanding of what's going on in really the center of the target. And then we'll probably come out of field, digest this data. We also have some other outstanding data waiting and coming back to us from areas around Tarcoola and Tunkillia, where we'll come back, get this data, get the assays, look at our updated magnetic data, and then figure out how we go back into field and really follow up hard a little bit later this year with the objective of completing 20,000 or more meters of drilling during this calendar year and ending the year with a significant resource update across the projects.
I mean, how do these new areas like Area 51 compare with your sort of existing, the previously drilled areas? So, for example, at 223, where you already have your sort of JORC deposit, JORC resource of almost 1 million ounces.
Well, I mean, what's interesting about them is that they have some very, very similar geophysical features. So the Area 51 of all of our sort of immediate satellite targets there looks the most like the higher grade core that we have in the 223 deposit. So that sort of 2.5 kilometer long deposit there at 223, when we remodeled that and published a resource in November 2020, we inferred based upon some drilling data that we had that there was actually sort of a higher grade core in the middle that may be up to 500 meters long. Last year's drilling, we put 4 holes through that to try to validate what was going on, and we did end up validating about 250 meters of that inferred central higher grade zone. So one of our holes, for example, had about 43 meters of mineralization in total across the hole. That was probably about 3.5 grams per ton. So that's obviously very interesting because it sort of changes the way you think about, pursuing a large scale open pit in terms of how you organize and strategize the development. But it also helps us think about where might we be targeting similar higher grade pockets or higher grade zones, and how do we build our exploration thesis around that. So Area 51 looks the most like that central higher grade zone in the 223 deposit in terms of geophysical features. There is some historical calcrete work, there's been some shallow RAB drilling, so it has all the right sort of initial ingredients and sort of high value roadmap to end up being something quite interesting. And if we test it and we correctly intersect structure, or we find structure where we predicted, and of course, if that's mineralized, then it's sort of a real win, and we'll start working on building out on that structure. And it, who knows, it could end up becoming another 1 or 2 kilometers of mineralization, which really starts to put scale on this footprint around the Tunkillia Project.
And these are only the first of several potential targets you'll be looking at, yeah?
Correct, yeah. So Tunkillia is, again, it's one of these areas that, just like Tarcoola, it's been very, very underexplored in terms of modern systematic work for the past 20 or 30 years. There has been historical drilling, but it's been very kind of limited, very piecemeal. And it's also, I think, one thing that we need to remember is that to the extent that work was done in this region, it was predominantly done in the 90s and early 2000s. And this is a period of time when most drilling was being scoped, and search domains were being restricted based upon a US $300 to $800 per ounce gold price. We're in a completely different world now. So even where we do see mineralization as modeled by historical drilling, there's probably significant potential for extension of that. So the 223 deposit, we think, has got potential to grow along strike and to depth. It's open in all directions. 223 North is an area we identified last year, Area 191. Area 51 is another satellite. These all sit within about a 4 by 4 kilometer grid, so about 16 square kilometers. And then as we look down the shear that hosts that 223 deposit, we've got about another 20 kilometers of shear there, and a lot of the same new models that we've been developing, which correctly predicted these areas we've been turning into mineralization, they also suggest that those styles of mineralization may continue down that shear. So it's a camp scale perspective opportunity that really has district scale potential if we can continue to replicate and validate these models.
Absolutely. Just moving on to the corporate side of the business, you've had some exciting news. A new chairman come in, Ken Williams. Tell us a little bit about why you've got Ken on board and what it means for the company.
Yeah, look, one thing that we are really focused on as a company is what we actually have is a very unique identity in some ways. So we're very sort of pure South Australia focused. So on the ASX, looking across our peer group, there's quite a few Western Australia based explorers, obviously quite a few projects in sort of the Pilbara now and the WA goldfields. But across the ASX, when you look at our sort of true peers, Australian open pitable sub 1.3 gram per ton large scale projects, we are relatively unique in that we are the only one I've been able to find that is pure play South Australia, pure play gold focused. And we're really leaning into and building that identity of being South Australian based. So we've been doing two things. One, we've been building our South Australian based leadership team. And two, we're also building our new sort of completely in-house project management and geology team. So Ken being based in South Australia and obviously having a very strong background in gold mining, he was the former CFO of Normandy Mining, is really a strong addition for us to, one, build that identity, two, build that really strong expertise and leadership at the board level, and make sure we're continuing to really build that South Australian identity, because we see so much potential in that area, across that sort of key 200 to 300 kilometers of the central Gawler Craton, that we really do believe we could just focus there for the next 30 years and never need to look elsewhere for gold mineralization.
Absolutely. And when do you hope to have some results coming out from your Tarcoola and Tonkillia drilling campaigns?
We started drilling at the end of April, so 25th of April, I think, is when we announced commencement of drilling. So, we will just be getting first samples off site relatively soon, and then we would expect sort of a 6 to 8 week turnaround. So I would anticipate toward the end of June, we'll start to see some of our first results for drilling. And then we should be having, drilling results coming in basically throughout July and August. We will then, of course, be recommencing additional exploration programs around that time as well, and look to do another sort of 10 to 15,000 meters. So then we would have, September, October, November, December results coming in, and we are looking at staging our drilling programs so that we are essentially timing the key assays we want for integration into regional resource upgrades, so that we can do an end of the year mineral resource update. Okay,
and in terms of sort of paying for all of this, how's your funding looking? And also, you've got these new sort of heavyweight chairman come in. I mean, how's that all sort of tying together with the funding of the drilling campaigns?
We're very well capitalized. So as of the 31st of March of this year, we had $10.8 million. So we're pretty efficient on our capital expenditure when it comes to exploration. So good rule of thumb for us is sort of $200 per meter of RC drilling all in, and that includes everything that's drilling, that's gold assays, that's multi-element, that's personnel, that's infield logistics, everything. So if you actually can break down enough data, that's actually relatively cost efficient, and we're very focused on choosing our shots. So we don't drill 50 holes to try to find something. We try to precisely predict structure undercover and then test that with 10 to 12 holes. And that gives us the ability to test more things more cost effectively, including when we have the bid in the ground. So with $10.8 million in cash at the 31st of June, that puts us in a very good position to be funded for the next 12 to 18 months if we're looking at doing another 10, 20, 30,000 meters of drilling. Without having to worry about raising capital. But one of the other things as well, where again, something that sort of sets us apart from most of our exploration peers, is we have a considerable asset base in the region, and that asset base includes surplus equipment, it includes low-grade stockpiles, it includes mineralization that may be high-grade continuous mineralization on an open pit. So we have a number of ways that we can look to extract value from our assets and realize additional cash, or sort of raise cash internally, if that makes sense. So this is something that we look at actively in the background. It's obviously not a core focus. It's not something we sort of discuss or sort of make a prominent feature, but we would expect to have considerable capital income to offset our expenditure, and really just continue to show the market, A, that we're very careful with our shareholders' capital, but B, that we're replacing capital, and we can essentially extend and stretch our funding well beyond what people might guess.
Excellent. Well, you've got a busy year ahead and some exciting new changes at the company, but thank you very much for joining us today for this update.
Thank you.